Disclaimer: all my videos are for educational purposes only. I am teaching and explaining investment trading to everyone, but I am not giving out any advice. All investments are subject to market risks, so please evaluate carefully before you invest, as you may lose your investment.
Hey Billionaire fam, what's up? Welcome back to a new video. So I know a lot of you must be thinking why I wasn't posting any video for the last couple of weeks, and it was due to the fact that I recently moved from Mumbai back to London, and packing up everything in Mumbai, saying goodbye to my family and moving back to London, adjusting to the London life. All of this took a lot of time, and I thought I would stay away from making videos just for a while, just so that I get reacquainted to the life here in London and then start again. I know that's no excuse and I'm really sorry, but I'm back with a kicker, so let's get going. So today's video is gonna be on the risks of short-term investing or shorting of a stock, as well as day trading versus long-term investing. Now I know I already talked about them in the videos of shorting of stocks and day trading, and I know I didn't really talk about it much, so that's why I thought might as well make a complete video just talking about that. So today's video is just going to be about that. So let's get right in and let's enjoy finding out what are the risks of shorting of a stock as well as day trading in stock market. Okay guys, so first up, the risks of short selling. So now there are three risks I really want to highlight, even though I talked a little bit about it in my earlier video of short selling, but still I think this is really interesting and really you need to understand this. So the three things I need to talk about is this. First things first, it is risks with going short without a stop loss. Now, most of you may not know what a stop loss is, so I will explain it very briefly, but I am going to make a video on stop loss and talking about it in another one, part B of general terms of stock market. I've already done part A, so I'll do a part B and I'll be explaining that. But stop loss is basically where you tell the market that, okay, if let's say you've bought a stock at $20 and if you're expecting it to go to $40, you still keep a cap that if it goes down to 15, just sell it. You don't want to go below that and make a loss more. Even though you might think it may go down to 10 and then go to 40, you are still like, no, I'd be reasonable. Let me take a $5 loss and then make up for that loss somewhere else. So that is what a stop loss is. I will explain it more in detail. So risk is when you are going short and you don't put a stop loss, it can really, really hurt a lot, because what happens is that when you're going short, you believe that the stock is going to go down, but then you can never capitalize on something going up as well, unless you've already hedged your bet in another place. I know I'm talking a little bit too much technical, but this is something you do need to understand, that you need to keep a certain stop point that says that if you are going below that, if the market reverses against you, you need to make sure that you don't just start winding up with an infinite amount of losses. And that is the second risk in short trading, which is unlimited losses. You can have an unlimited loss. Like I said in my video of short selling, the risk versus reward factor in long-term investing, if you see my previous video, it's infinity to basically X, wherever the price you buy it at. Whereas short selling is the complete opposite, because when in long term, if the price of a stock can potentially go to infinity, so you are making infinity minus X versus your loss is X minus 0, versus short selling is the complete reverse, so the risk is infinity. So that is why you have an risk of getting unlimited losses. And the third one, which is very, very important, because not a lot of people understand this, but you do need to know this. So there is a risk of demand for return. So what that means is that when you are doing a short selling, basically what happens is you are borrowing shares which someone already owns. So someone has already bought shares of, let's say, Apple, right? They've bought 20 shares of Apple and they are keeping it. Now you want to short Apple. So you need to first sell shares to someone and then buy it at a lower price. So when you do that, you are assuming that, let's say, I have bought it and you are taking it from me. So you have borrowed the amount from me. So you need to repay the same amount back. I will still get 20 shares. I am not going to be either at a loss or at a profit. It's nothing to me, but it is to you. You are the one who's selling at a high price and expecting to buy at a lower price. So now the thing is that when you are doing that, then you need to understand that the person who has bought the shares in the first place, me, I can anytime demand, okay, I see the price going up. Not only have you made a loss on your shorting of stock because you sold at a price, but now it's higher than that price, so you've made essentially a loss. Now I am forcing you to buy it and pay me back the shares which I had lent to you. So now that is another huge risk which not a lot of people understand, but you do need to know that. So these are three of the major risks that are there when you are shorting a stock. So now I hope you've really understood this, and now I'll move on to the risks of day trading. Okay, so now moving on to the risks of day trading. So now there are three risks I want to highlight in this one as well. Even though I did talk about a little bit in my video on day trading, I still want to highlight them very much over here. So now the three things, first one I want to talk about is the possibility of large losses. So now when you're day trading and you're trying to make gains on very, very small price changes in a stock, then what can happen is it can either go up very fast or down very fast. So now when you buy, you have no idea whether it's going to go up a little bit or down a little bit. So you can tend to constantly make a loss after loss after loss. Like it can be like it just goes a little bit down, you sell, you panic sell, then next time you buy, again it goes down, again you panic sell, and you constantly sell for a loss, and the small losses just accumulate and then become a huge loss. So that is really, really dangerous, and if unchecked, it can lead to a very large amount of loss. So that is something which everyone needs to keep in mind while you're day trading. Of course, it does have a lot of advantages, but sometimes the disadvantages just weigh down on them. Now, the second one I want to talk about is the stock trade commissions. Now, stock trade commissions, not a lot of people take it into consideration, and I want to specify that this is an absolutely critical thing to always keep in mind whenever you're trading. Not just in day trading, not just in short selling, but even in long term. Every time you need to keep this in mind. Stock trade commission is when the platform or the broker you're using to buy and sell the shares, they take a small fee. Now, small as in it could be maybe $2 or £2 or maybe even $20. It can vary deciding upon them, and of course deciding on the amount of money you put in as well. Now, when you do that, so especially during day trading, it becomes infinitely worse. When you're long-term investing, let's say you buy $2,000 worth of Apple shares, right? Now you've paid $10. So your total cost was $2,010. But you only think it's $2,000. So when, let's say you bought the share at $20, you bought 100 shares at $20, $2,000, and then it goes to 30, you've made 1,000. But actually, no. You have made 980 because $10 while buying, you've paid the broker, as well as on selling, you have to pay another 10 to the broker. So you end up with 980. Now, even though it doesn't seem very much when you are dealing with thousands or even tens of thousands of shares or amount of money, but then as you go into hundreds of thousands, millions, tens of millions, hundreds of millions, then it really pinches. It really is a huge amount. So that is why day trading becomes much more worse, just because of the fact that when you're doing day trading, and let's say you do a little bit nitpicking, and you constantly make gains on small changes in prices. Let's say you make $100. You had to spend $10 on buying, $10 on selling. That's $20, which is already 20% of your entire profit just gone over there, because you're paying that when you're buying and selling. So your $100 is actually not $100. You made $80 profit. So not a lot of people keep that in mind, and that is why not everyone understands how much you've truly made out of day trading, and most of the times it can actually sometimes end up in a loss. Rather than actually thinking you've made a profit, you actually are seeing a negative on your balance sheet. Now, the third thing, and very important, but not everyone does it, but still it's a really, really addictive thing, and that is why it is very important to know, that is over trading. Now, a lot of people, when they see that, oh, they've made a slight profit in one of their trades, they are like, okay, if this did well, I know this one can also do well, so I'll put that money. And you constantly try and constantly trade. And sometimes, even if you see a lot of losses, you're like, I've made $10 loss, it's fine. Another $10 loss, it's fine. I'll make $20 over there. Another $10 loss, I'll make 30 over there. You constantly try and buy and start grabbing from every corner, and you end up with a huge loss. And that over trading can always lead to a large loss. And that is why you do need to keep that in mind, because nobody does think of it, but it is absolutely essential. So these are some of the risks of day trading you do need to keep in mind. I hope you really understood it, and let's go on to the final phase. So now, just in conclusion, I just want to say that when you are looking at the risks of short selling as well as day trading, you need to understand that long-term investing is actually a pretty good bet, because investing for the long term is the best way to secure a very strong financial future. As in, you don't have to worry that whether the stock crashed 20% today or it went up only 5% tomorrow. You always know that in the end, you will see a good linear growth if you have chosen good stock or stocks. Now, some of the best ways to actually make long-term investing the best can also be either if you diversify and you constantly buy various different types of stocks, like one from blue chip stocks, which are always going to perform, some from dividend stocks, or some from growth stocks as well, anything. But diversifying really helps, as well as trying to mitigate risk by investing into ETFs or otherwise mutual funds or any of that. So long-term investing is really good, and it does help you to save yourself from the risks of short selling as well as day trading. Of course, shorting and day trading both have a lot of advantages, but unless you keep your own emotions in check, as well as you make sure that you are fully equipped, fully well researched and everything, it can always backfire against you. So I hope you really understood, and let's sign off now. Hey Billionaire fam, this is where I sign off for today. I really hope you enjoyed today's video. I really hope you enjoyed the amazing scenery out here. The weather is so nice, chill and perfect. I really hope you enjoyed this video. You understood a lot about the risks of short selling, risks of day trading, why long-term investing is good, what to do, how to do everything, understood that entire package. I really hope you understood all of this and you really enjoyed today's video. Now, next week video, I'm planning on making a nice motivational video just to break the tempo of my entire batches of videos. So I'm gonna come up with a nice small motivational message regarding investing. So I really hope you get inspired from that video, you get pumped up, energized, and want to invest tomorrow. So until next week's video, stay tuned, take care, thanks for watching, and I will see you in the next video.